Ladies and gentlemen, welcome back to another Bitcoin update. Once again, I'm in a nightgown, and my justification this time is because the market's been boring. It's making me fall asleep. So I'm in a nightgown, it's suiting, it's matching the setting of the video, but the video really actually isn't that setting. The video is about 24.5K, the line in the sand for Bitcoin. I know we've discussed it a lot. I know people have discussed it a lot, but I'm looking at it from a unique perspective today. Analyzing the bull case, okay? Believe it or not, there is a bull case. And then analyzing the bear case, okay? Looking at the both and looking at the thing that's dividing them. Again, the line in the sand, 24.5K. 24.5K isn't a simplistic support zone. It's a support zone that's also showing up on weekly chart. It's showing up on monthly chart from surprising perspectives. And it very much is not a coincidence as to why it's showing up in these charts, because it's actually a very, very important level for Bitcoin. And we do need to discuss it quite more than we've already done. We're making a dedicated video on that level, basically. And I really, really recommend sticking around and watching it. We're looking into bearish September, which is basically saying that Septembers are generally red. We're looking into a downtrending line of a daily chart. We're looking into the bear case, the bull case, and ultimately that support level and what it means for Bitcoin and how you should make decisions, whether you buy or sell based on that level. Without further ado, guys, let's get into it. Okay guys, the charts we'll be looking at today are the Bitcoin range-based chart, giving us a good idea about where the critical ranges are for Bitcoin and hence giving us a great idea as to when to buy and when to sell on Bitcoin. We're then going to be diving into the daily chart. We've got a unique downtrending line that I don't think that many people have identified at this point. I think people are still looking at lines from up here, but there's actually a downtrending line coming from over here, and we'll discuss that. We're going to look into 15-minute chart for a short-term analysis. We'll look into the 3-day chart, looking at the bear case once more for Bitcoin, although we've discussed that massively over the last couple of weeks, so we'll dive into it briefly, and then we'll look at weekly chart, why we've seen a weekly candle breakdown really, and actually a very bad weekly candle that closed just then, an hour ago really, and then monthly chart, and how the monthly chart is on the edge, but it hasn't quite broken down yet, which also links up with our range-bound construction, right? So that's what we're looking at today. Before we get into that, I'll quickly give a shout out to the VIP group on Telegram. We've done some upgrades to VIP, as you can see in this message here. We've added in a VIP group chat. We've added in exclusive market news and updates. That's going to be occasional when it's necessary, and the same thing happens with trading tips, right? I've added in trading tips as well. Again, occasional when it's necessary, but these upgrades have come through. They did not exist a week ago. And, you know, we've upgraded the chat with 3 new things and the price has not changed an inch. So go ahead and check out VIP, 79% win rate. All the information's on Telegram in this group, which is free to join. You can just check it out. So go ahead and do that. Without further ado, let's get into it. And we'll start with the range-bound construction on Bitcoin. What is the range-bound construction? What are the range-based analysis telling us on Bitcoin? Well, first and foremost, we can look at these ranges and we can identify what they are very quickly. I don't want to spend too much time into it. Of course, you guys probably know a lot of this by now. But essentially, we have the lowest range here, which is between 15K and 18K, which is like our bottoming out range. That's where we found the bottom on Bitcoin. That was the last leg downwards. It was short-lived, as you can see. It only lasted about a month or two really, and we found the bottom very quickly and we went upwards from there, found a kind of double bottom formation, and we went upwards from there. We then have the lighter red range, which is between around 18K and around 24.5K. Now this is where we start to get kind of interesting, right? Because what is 24.5K? Well, 24.5K is the top of this range here, okay? So 24.5K is what we rejected from 1, 2, okay, 3 times if you're counting the wick here. And we also came up, and when we came up above it, we kind of flipped it for support, right? We flipped just above it for support. It was actually 24.5K, 25.2K, sorry, but that makes sense because we wicked above it before, so we can wick just into the range where we wicked above it. Basically, we tested for resistance on 2 occasions, okay? 3 occasions if you're counting this wick here. And then we came above it, and we hold it for support, okay? So that's very clearly the level Bitcoin needs to hold. That 24.5K on the weekly chart level is what Bitcoin needs to hold. So long as we hold that, and we also tested it for support here, right? We went down during the big drop, during the big crash on Bitcoin a couple of weeks ago. We went down and we sharply tested that 24.5K exactly and went upwards from there. So it very clearly is the major support Bitcoin needs to hold that divides the ranges. Now, provided we hold 24.5K, Bitcoin is not actually in a downwards trend, because when you're measuring downwards trends on long-term charts, what you're essentially doing is you're identifying a pattern where you have higher lows, right? Higher lows and higher highs. And technically speaking, I mean, we're barely hanging on at this point in time to a higher low. But at the same time, technically speaking, we are in an upwards trend on a macro chart. The only way we would break that upwards trend properly right? Yeah, we can close below this level at 26k, but overall, the only way we can break this uptrend properly is breaking below 24.5k on the weekly chart. And if we break below 24.5k on the weekly chart on Bitcoin, we'll be re-entering the previous range, which we haven't been in since around March this year, and we entered in around June last year. That would be bearish. It would basically say that Bitcoin was unable to move upwards. It double topped over here in this upper range. We're re-entering a lower range, and it would be indicative of further downside price action. So basically, the worst thing that can happen to Bitcoin right now on the charts is re-entering the 24.5k range. Basically, we need, it is absolutely critical for Bitcoin to maintain on the weekly chart above 24.5k. If we lose that level, we're getting back into the previous range, and it's not looking good for Bitcoin at that point. Now, it's not like if we get back into the previous range, we're going to go down in new lows. No, that's not really the case. But if we drop below something like 18.5k, we're breaking into the actual the bottoming out range. That's when we're looking for new lows on Bitcoin. If we drop below 24.5k, we're just looking for some more support down here and more liquidity and perhaps more consolidation before moving up once more. It's really this range down here at 18.5 that is the real proper danger zone, because that's when you get into making new lows, and that's when you get into invalidating the 4-year cycle theory. Realistically, it's just something we don't want to do. It would be a massive setback if Bitcoin dropped below 24.5k. Unfortunately for Bitcoin, okay, we're not seeing good signs at this point in time. I mean, on the weekly chart, actually, I'll start out with the 3-day chart. I'll start out with the bear case, right? Because this is the scenario that says Bitcoin will drop below 24.5k. And basically, the bear case you can make is that Bitcoin formed a head and shoulders pattern throughout the entirety of 2023. We've broken down from a neckline, and as per a measured move from this head and shoulders pattern applied to the breakout zone, we will be seeing a retest of this uptrending yellow line on the bottom of the screen here. Okay, that's what the head and shoulders says. It says we'll retest the yellow line on the bottom of the screen, which has been an uptrending support on Bitcoin since 2017, all the way back here in July 2017. It marked the bottom in 2018 on two separate occasions, right? So it's not just a coincidence. It marked the bottom roughly during COVID. Obviously, there was a high volatility there, so we're bound to see a fake out below it. It also marked the bottom here in 2022. So this uptrending line is very, very important for Bitcoin. It's very much valid. And if we do go down to it, we will likely be bouncing off of it, at least briefly. And so the head and shoulders pattern that's broken down does suggest that we go and retest that yellow line. Now, that would imply a breakdown below 24.5k. So in the bear case, right, in the bear case for Bitcoin, which is supported by this chart here, we go down, we break below 24.5k, we go down here like 22k, maybe 23k, maybe 21k. We test that, maybe we wick below it briefly, and then we go upwards from there. That is the bearish scenario. So I want to point that out. In the bear case, right, it is probable, in fact, it's very much likely that we break below 24.5 and we find support somewhere in this red box before shifting back and doing something like that. That's what the bear case looks like for Bitcoin. That's what I can see as the bearish scenario here. Now, the good news is, even in that bearish scenario, right, we're not actually going to go too low. We won't drop below 20k most likely, and we won't really be in any proper danger of making a new low on Bitcoin in terms of a macro scale, right? We won't be in any proper danger of dropping below 15k. So even in the bear case, I'm not particularly worried about the long-term macro structure on Bitcoin, but it certainly wouldn't be good. It would be a delay. And I've made this observation in the past. I've made the observation that if we're taking this bear scenario seriously, which we very much should be taking it seriously, it's not invalid by any means, we could be copying what we did in 2019, which is when we saw 1, 2, 3 legs up, 1, 2, 3 legs up. We then saw a very long period of downwards consolidation before the halving, and around the halving we started to kick off again. And if we're going to do something like that, which we actually do have a lot of similarities to, we will be seeing very long downwards consolidation until just before the halving, really. But realistically, we have to be reasonable here, and we have to say, well, the only reason it lasted this extra period of time is because of COVID. Realistically, this should have bottomed in December 2019, right? That should have been the bottom. And so that means that this would have been a 6-month downwards consolidation. If we're taking 6 months of downwards consolidation and we're starting it off in June, we should be bottoming out in around December. And we can very well have a scenario where we hold this yellow line, while doing what we did in 2019 before going upwards from there. That is possible, okay? So it's not like if we're following 2019, we're destined to break down from this 6-year uptrending support. That's not really the case. It's kind of hard to say, right? There certainly is a possibility on both sides of the both cases. But Overall, I'm going into it too much than what I need to. What I'm meaning to say is this. We drop below 24.5k, we will be seeing extended bearish price action on Bitcoin, and we'll likely be going downwards towards the low 20ks, retesting this yellow line. That is what's happening, right? If Bitcoin does drop below 24.5. Now, luckily, 24.5 hasn't given up yet, and the monthly chart is, indicative of that. Yes, we've seen many indicators saying we'll drop below it. Yes, we've broken below many things, such as weekly chart, which I'll look at in a second. Even on the monthly chart, we've broken below a very major support level. For example, this support level here, as you can see, 29.3k. We rejected from it, we got above it, we flipped it for support, we were unable to hold it, we dropped below it. Now, that's not good, right? That's very bad. In fact, on a macro chart, you don't want to be doing that. That's what we did, unfortunately, and that's bearish. But at this point in time, the 50 EMA, which has been quite important for Bitcoin in the monthly chart, right? Which kind of held for support over here, resistance, support, right? That is holding us up. And where does that sit? Guess what? It sits at 25.2k. And 25.2k, all right, are where the wicks, okay, from this 24.5k retest sit. They sit at 25.2. So the fact of the matter is, yeah, the monthly chart doesn't look good, but it's holding on, and it's clearly holding on to the same support zone that all the other charts are holding on. That's 24.5k, all right? And we're looking at monthly from a different perspective. We can look at the RSI on this monthly chart here, and the RSI in relation to 14 moving average on the RSI. You can see when we see crosses between these two lines, the yellow and the pink lines, purple lines, we see a bullish cross, bearish cross, bullish cross, right, throughout history, and bullish crosses lead to upside price action, and bearish crosses lead to the opposite. But overall, we saw a bullish cross here in February. It led to upside price action, but overall, we're weakening now, we're exhausting in the trend, and we're coming in, we're potentially seeing a bearish cross come in very soon. But what you'll notice is that the RSI is flattening out just before this bearish cross has occurred, right? That's because in order for the bearish cross to occur, some would say it's coincidence. I would certainly not say it's coincidence. I'd say it's very much programmed in the charts. In order for the bearish cross to occur, we need to be breaking below 24.5k, all right, on the monthly chart. So 24.5k is not only showing up for resistance from a daily chart, it's not only showing up for resistance on the weekly chart, it's also showing up for resistance on the monthly chart from two different time frame perspectives, from the 50 EMA and from the monthly RSI perspective. So it's not a long shot at all to say that 24.5k is a cliff, and Bitcoin is suddenly, I guess you could say, Bitcoin is sitting on the edge of a cliff, right? And if it loses that level, it falls. It's really as simple as that. And it falls for months. It falls for an extended period of time. So we need to hold 24.5k on Bitcoin. If we do not hold it, we will be going in for a more extensive correction as per the bear case, which realistically shouldn't be too bad for Bitcoin. But there is a chance, obviously, that it develops into something worse, and there's a chance we drop below this yellow line. In that case, we're going downwards, and in that case, we need to start really worrying about the long-term structure for Bitcoin. So yeah, look, very much, as you guys know, probably, 24.5k is extremely important. We do need to hold it, and as we go into September, we're entering the first few days of September here. September is really the critical month for Bitcoin. This is where we're really going to get tested, and I'm actually quite, vigilant in this month. And the reason I'm watching the charts a lot more than I usually do, and the reason being is because September is generally a very red month. Okay, September is the worst month that Bitcoin has had historically. We measure that by taking all of the historical turns from September's, and we kind of list them out. Where did Bitcoin start? Where did Bitcoin end? What was the percentage gain or loss? And we can see that we've only ever seen 2 green Septembers in the entirety of Bitcoin's price history, and one of them has been a 2%, so basically nothing. The rest of them have been very red, so 80% of the time September's have been red. Again, it's the worst month historically for Bitcoin. I don't know exactly why that is. It just happens to be the case. Perhaps it's a coincidence, who knows? But overall, coincidences like this, which form into public knowledge, do form into trends. Because if everyone thinks that September's going to be red, guess what? People control the price action. People buying and selling controls what Bitcoin does. If everyone thinks that something is going to be bad, it's going to be bad. I don't necessarily buy into the whole, the majority's always wrong narrative. I don't necessarily buy that. I think it's oversimplified. I don't think it's the case all of the time, and I think it's very hard to get a perception of what the majority think in general without being biased. And so realistically, it's even if it was true, it'd be extremely hard to understand what the majority thinks, right? Because the majority, believe it or not, are not people sitting on bloody Twitter comment section. That's not the majority. Majority of people are just, random dudes, basically. So September, red September, it has happened historically. Will it happen again? Hard to say. I'm not overly convinced that this is something we should be super scared of. Even the red Septembers have only been like 5 to 7% red, so it's not like they're brutal or anything. It's not like they dropped 30%. But yeah, look, it's definitely something to be aware of, and as we sit on such a major support level, it is, yeah, again, something to be aware of. As for daily chart, shorter term analysis on Bitcoin, I have identified this yellow downtrending line. Now, obviously, there are other downtrending lines, such as this line here, which I'll make these ones dash, because I actually don't think they're as important at this point in time, but... And we've got another one. It depends how you draw it, but I would draw it something like that. Okay, so there's a couple of downtrending lines for Bitcoin that you know, if Bitcoin breaks above, we're kind of getting back into that bullish territory. Ultimately, we need to get above like 28, get above all those lines, and we're looking quite good for Bitcoin again. We'll see a double bottom formation. That's one thing, right? That's one redeeming quality for Bitcoin right now. It is, you know, attempting to form a double bottom, because we had this first bottom here. We had a long move upwards, a big move upwards. A second bottom is forming now. If we do go upwards from here, break above these lines, it actually does look quite good. So although Bitcoin is on the edge of a cliff, we actually do have a solid chance here. And, you know, I'm not going to discount that chance too early. So look, there's that major support zone in green. We are sitting on that major support. We do need to break above, particularly this solid yellow line, which rejected us on our last move upwards for Bitcoin. It's had, you know, 5 or 6 strong retests. It is a very strong line. And we get above that line, the yellow line, we're looking quite good on Bitcoin again, because getting above that line as well, you have to remember, would imply a breakout above major moving averages. But, you know, if we're looking into short-term charts, super short-term, which is the 15-minute chart, unfortunately, Bitcoin's formed quite a bearish candlestick formation, market pattern, I should say, and that is, as you can see on the screen, an ascending broadening wedge formation. That's not what you want to see. Even if you don't think it's an ascending broadening wedge, even if you think it's this, well, guess what? That's an ascending wedge in general. So I don't necessarily have much confidence in the Bitcoin short term. Perhaps Bitcoin will surprise us and move upwards against the odds. But overall, I mean, RSI is showing on 15-minute chart, bearish RSI divergence. We're seeing volume kind of stagnant as this move continues upwards, right? You can see the flat highs on volume that down the bottom of the screen. I just failed to mark it out properly. Here you go. Flat lines on volume down the bottom of the screen, showing that, you know, volume is remaining stagnant while price is moving upwards. It's not exactly ideal. And if we're going off TA, I don't think that this move is looking particularly good right now. You know, obviously, if we drop below this yellow line and we drop below 25.8k, which is kind of this range support, that's when we look for another swing downwards to lower levels such as 25.2. You know, so look, again, I don't think the short term is looking particularly nice, but I do think on daily chart there is certainly a scenario in which Bitcoin finds a double bottom here and goes upwards from there, especially considering the support we're finding in the monthly chart, weekly chart, daily range. You know, there's a lot of support. You know, and I don't want to throw Bitcoin out the window before it's gone down, because the way I see it, right, and this is where I'll add my final notes into the video, the way I see it is this, okay? If Bitcoin, you know, drops below 24.5k, that's when you really should be considering de-risking on your positions on the weekly chart. But overall, right now, how far are we away from that level? We're only 5% away. So I think moving now, making a move now and selling now, me personally, and again, this is not financial advice, it's just my opinion. I think selling while you're 5% away from the major support is a bit stupid. I'd rather just cop the 5% loss and then sell while you're below the support. I don't see the point. What, you know, it's a general rule in crypto. You know, just like the same reason I said you shouldn't be buying up here as we were at the doorstep of 32, and everyone was like, no, buy. Right? For the same reason I said don't buy here, wait for a break of 32, you know, buy 5% higher. I'm going to say the same thing down here. I wouldn't be selling here. Okay, I'd be selling at 5% lower when we break down. That's just me. You know, you guys can do what you want. It's not my decision, but I mean, that's how I run my analysis. If we're talking macro bags, long-term bags on Bitcoin, we should be making long-term decisions. And guess what? 5% on a long-term decision is not actually that much to cop a loss from. So that's the Bitcoin video. I'll end it there. Guys, check out BingX. We have a BingX promotion right now. We also have a Bitget promotion, and by promotion I don't just mean I have my referral link. I mean we've got exclusive promotions right now. We've got a lucky draw promotion. If you sign up using my BingX referral link in the pinned comment or description below, you can spin this wheel, right, by completing various tasks. You can spin this wheel and get up to 100 USDT bonus. Not like a bonus where you have to do things to unlock it. No, like free money, just deposit it into your account. So go ahead and do that. And also BingX, non-KYC exchange, can sign up from anywhere in the world with just an email address. It takes like 5 minutes. You can deposit from other exchanges onto there. Very low trading fees, 15% trading fee discount with my referral link. It's a great exchange. Bitget is a similar story, except Bitget is KYC and you can't sign up from the US or Canada, but any other countries can sign up KYC. And if you do choose to KYC on Bitget, even if you've got an account right now with my referral link, If you choose to KYC, which you will have to soon, you'll get a 20 USD reward bonus to encourage you to do so. Again, very low trading fees. My referral link gives a 15% trading fee discount. If you want to have an exchange linked to your identity, Bitget is the one for you. If you don't, BingX is the one for you. I cover all bases here on Wolves of Crypto. And finally, Crypto Academy, Become a Trader 10-unit course, teaches you how to trade, teaches you everything you need to know about charts, analysis, finding trades, market psychology. Everything's on the website. Check it out. And the email address is on the website as well if you have any questions. So guys, thank you for watching the video. I hope you enjoyed, and I'll catch you in the next one.